Hi there, hope you're doing great today. In today's quick video, we'll discuss the top 7 considerations to keep in mind for international investors. As usual, our videos are for educational and entertainment purposes only and do not represent tax, legal, or investment advice. So let's begin. Number 1 is taxes. Determine how you will invest in the US, individually or through a business entity. And what are the tax implications both here in the US and in your country of residence? Very often, foreign investors come into the US by setting up US limited liability corporations or LLCs. However, in certain jurisdictions, coming in by that structure may result in double taxation. So ensure you've discussed with your own in-country CPA as well as a real estate savvy US CPA. Number 2 is withholding taxes. It's not uncommon for the operator to actually withhold the US tax on behalf of the IRS, which effectively forces you as a foreign investor to file a US tax return, and in the event that tax wasn't really due and it's determined it's not due, then you can file the US tax return to claim your refund, full or partial. But either way, if you're setting up a US LLC, more likely than not, you will need to file a US tax return. So ensure you understand the mechanics, timing, and requirements for that after discussing with your CPA. Number 3 is hiring an attorney who is able to set up that legal entity for you, to draft the formation documents, obtain the tax identification number known as employer identification number, EIN, and make sure it's all properly and cleanly set up. Number 4 is diligence requirements that are really, a lot of those started with the US Patriot Act, but if you're dealing with third parties, more likely than not, there will be certain forms you will need to complete and additional information you'll need to provide so you can be identified not only as an individual but also via your business entity to meet US compliance requirements. Number 5 is opening a US bank account where you will be receiving the distributions or the income from the real estate investment, as well as potentially paying some of the expenses, whether that's CPA, attorney fees, or if you're actually operating the property, operating expenses. Number 6 are capital restrictions. Depending on the jurisdictions that you're investing from, there may be certain capital restrictions that apply in terms of how much capital you can effectively export out of the country. So be mindful of that because that may limit your ability to fully participate. Number 7 is currency reserves, and those apply both ways, whether it's at the beginning when you're converting your in-country currency into US dollars in order to purchase the US asset, or on the back end where if you decide to repatriate those profits back to your home country, and if you decide to keep them in your local currency, then converting from US dollars in your local currency may apply. And I know we said 7, but we'll add one more as a bonus, and number 8, that's regulatory risk. Making sure that you're complying not only with US regulatory requirements, but those of your country, because again, those may either limit how you participate or prevent you from participating altogether, and there may be additional implications that you may have to keep in mind. So that's it for today. We hope you found today's video helpful, and if you did, please like, share, and subscribe, and we'll see you at the next one.